G'day guys, welcome back. In this video, we are going to talk about another ETF by BetaShares called BetaShares Crypto Innovators ETF. It has a ticker code CRYP and a management fee about 0.7% per year. The ETF itself provides global exposure to the companies within crypto economy, such as crypto miners, crypto exchanges, supporting services, and also some companies that holds cryptocurrency as a treasury holdings. This ETF aims to track an index called Bitwise Crypto Innovators Index. And I would like to thank Blake Riley for suggesting this ETF to us. Thank you, Blake. Before we having a look at the underlying holdings of 32 companies within this ETF, I would like to discuss briefly the pros and cons and also the risks of investing in cryptocurrency and also crypto related businesses. As you know, we are in the bull rally of cryptocurrency. Bitcoin price keep going up, Ethereum price keep going up, NFT keeps going up, and most crypto analysts will say we are still early in cryptocurrency. And interestingly, that's what they said in 2018. I'm not an expert in cryptocurrency, but in my point of view, cryptocurrency is similar to digital gold. And I view cryptocurrency as an asset that doesn't have an internal rate of return. So the only return you'll get is when somebody else willing to pay more money to your asset. So similar like gold. If you think of it, as of November 2021, gold market capitalization is about 11.5 trillion. And if you add up top 6 cryptocurrency out there in the market, Bitcoin, Ethereum, Binance Coin, Solana, Tether, and Cardano, we get about 2.1 trillion US dollars. And if Kathy Woods from ARK Investment is right that everyone in the world will put 10% of their wealth into cryptocurrency, that means there is still a potential for cryptocurrency to go from 2 trillion into maybe say $8 trillion. The world's GDP according to World Bank for 2020 is about $84 trillion, and 10% of that is $8.4 trillion, right? Just for comparison's sake, GDP for United States is about $20 to $21 trillion, and China is about $14 to $15 trillion. Let's think about some of the risks about investing in cryptocurrency. The challenges with cryptocurrency is regulations, because all government prefers centralized systems. That's why each government has their own central bank. And cryptocurrency is trying to decentralize everything. And second, the possibility of fraud and criminal activity involving cryptocurrency. The recent case is for the Turkish crypto exchange boss goes missing, taking away 2 billion US dollars of the investors' funds with him. As you know, Turkish lira has gone through severe devaluation. Just for an illustration, 5 years ago, Turkish lira worth 40 cents of Australian dollar, and now it is worth about 14 cents. Because a lot of people thinking, oh, holding cryptocurrency protects me from inflation, a lot of Turkish investors invest in cryptocurrency. Next, cryptocurrency is evolving very quickly. We have NFT, people trading with arts with it. And also we have DeFi, the decentralized finance. The next risk is that cryptocurrency is deeply volatile. And in fact, nobody can predict what's going to happen in the future of cryptocurrency. Just like nobody can predict what's the iron ore price next year and also the gold price next year. And this adds more risk to those mining companies because they don't know how much they're going to get paid because the income they're generating is from cryptocurrency. Now let's have a look at the 32 companies within this ETF. We're gonna talk deeper about the earnings and also the market capitalization for the top 15 holdings, because the top 15 holdings constitute 87% of the ETF. So for the top 15 companies, let's start with the market cap. The biggest market cap on the top 15 companies are the semiconductors companies such as Nvidia and Advanced Micro Devices, AMD. And also AMD and Nvidia are the only companies that provide stable income. In 2020, Nvidia has reported a profit of $4.3 billion and AMD reported a profit of $2.5 billion. And if you check the rest of the companies, 8 of the top 15 reported a net loss. And if you compare the market capitalization and the earnings, and you get the PE ratio, you can see the PE ratio on the columns here. The ones that it says NA means not applicable, that means they have a net loss. And the ones that have a PE ratio, they are priced at really expensive price. The thing with semiconductors company is that if the chip shortage keeps happening, that means that the semiconductors price will keep going up. It'll impact the crypto mining companies because they have to pay more money to buy those ASIC miners, for example. After the semiconductors company, the next company that is profitable are the exchanges and also the asset management, the ones that do trading Bitcoin. Let's talk about the exchanges first. The crypto exchanges makes money by transaction. So as long as people buying and selling cryptocurrency, they'll make money by charging transaction fee. It is a good case for Coinbase for reporting a profit of $300 million in 2020, but it's not always great business because, for example, Voyager, a crypto exchange in Canada, reported a net loss for the past 2 years. And from what I heard, Voyager also don't charge commission, so I'm not sure how do they generate revenue. Next, the asset management company, for example, Galaxy and Silvergate, they generate revenue and earnings. For example, Galaxy reported an earnings of $220 million in 2020, and Galaxy share is trading at the market cap about $3.8 billion, which means a PE about 17. I think people still have mixed feelings because cryptocurrency can go to zero even tomorrow. So let's talk more about the mining companies. On the top 15 companies, there are mining companies such as Riot Blockchain, Hut 8 Mining, Hive Blockchain, and interestingly, if you look at these mining companies, they generate revenue, but they have reported a loss. For example, Riot Blockchain has reported a loss about 12 to 20 million for the past 2 years. And the ones that are profitable are few. That is Hut 8 Mining and Hive Blockchain. And I'm not an expert in crypto mining. After learning more about the business model that relies on the facility hash rate and the power consumption, the coin price, the network hash rate, cost per kilowatt hour, maintenance costs, it is a difficult business. It's a tough one because it's very energy intensive. And if you look at those Bitcoin miners, they are filled with many fans because those computers generate a lot of heat. So it consumes a lot of energy and also release a lot of energy. So you have to deal with the cooling system, and also you need to have an edge by having a really cheap electricity. And talking about electricity, for the next 50 years, we are in the age of energy transformation. So it will be unethical for some people to mine Bitcoin using coal, for example, and they prefer Bitcoin mining using renewable energies. And Hive Blockchain is the only one that is making money, possibly because the operation in Iceland or Canada is using renewable energy. And in the Iceland is perfect weather for them because it's cold. They can just use the wind from the outside to cool down the miners, and they use the electricity that is really cheap from the geothermal. Next, we have mining equipment suppliers such as Canaan, Nvidia, and AMD. We already talked about the semiconductors company. Canaan Inc. is a Chinese company that supplies those ASIC miners, and we already talked about how they may be impacted with the chip shortage, and for the past 2 years they have reported a loss of negative $30 to negative $160 million. And the fact that the chip shortage is still happening, I'm not sure with the Bitcoin price, with the cryptocurrency price going up, say doubling down or tripling down, will help them at all. It will only increase demand, in which they cannot do much because the chip shortage is happening. So in conclusion, not all crypto-related business are profitable, and the volatility of cryptocurrency doesn't help this business to grow at all. 1 year they can make a record profit, but next year they can lose a lot of money and possibly go out of the business. If we look at the price to earnings ratio, the top 15 holdings as of November 2021, they are all expensive. Even the semiconductors companies are expensive, and we need to be more cautious in investing in this low interest rate environment, because who knows, maybe next month the bond interest rate will go up and people are seeing there's no value investing in these unprofitable businesses. Personal opinion, if you're still new within cryptocurrency, I suggest try investing in the cryptocurrency itself and start learning how the business work for the crypto miners and also the crypto parts suppliers. And once you have gain more understanding, then maybe you consider this kind of ETF. But let me warn you, the worst scenario is that too much capital, too much money, and not enough wisdom. That is, you start benefiting from trading cryptocurrency and thinking, oh, it's easy.